In front of you, you can see a S&P 500, or it's the E-mini actually of that market, the ES, and Tom will tell you all about it. So, Tom.
Thank you, Peter. Yeah, Tom Williams here, speaking to you from Worthing in Sussex. I was going to say Brighton. It's not. It's near Brighton. Anyway, nice to talk to you. Glad you're here. Now, I've got this chart up now. This is the mini S&P 500 running live, of course. And I don't know who put this time frame up, but I certainly didn't. But it's marked as being 111. So I reckon that is under 2 hours, right? But still works. They all work. All these different time frames you can play around with. And it mystifies some people how the different time frames all work. Now, the only way I can describe it was I describe it as if you're a doctor at a hospital and you visit a patient, say they got typhoid or something, right? You initially diagnose them and start treating them. Now, it doesn't matter whether you pop to that bedside every minute, 10 minutes, 30 minutes, hour, whatever. You're not going to see a lot of change, but the trend will be there. Hopefully, for the poor patient will be getting better. And it's the same thing with these charts. But it's fascinating if you look at them. But this is a 111 minute chart. And when we look at it yesterday, if you look at this at first glance, you might say, oh, that's a reversal look. But if you look at it a second time, it's not reversal, is it? That first bar there, look, that blue bar, right, although it's an up bar there, when it opened, it must have plunged down into the low, and obviously there's stopping volume there. Look, there's a very high volume come in, and on that stopping volume, wham, it closed up on the high. Then, just to be as difficult as possible, they mark the next bar down. That's got fairly high volume, right? Of course, that's all done to shake as many people out, throw as many people off as possible. So that's kind of interesting. That happened yesterday. Now, on that, there's obviously some buying here. It's a stopping volume, look. Classic stopping volume. It couldn't possibly be anything else. If the market plummets down like that, to a low like that, and then shoot up and close at the high, and you've got volume like that, activity like that, it can only mean one thing: they're buying. Can't mean anything else, can it? Okay, so the market moves on. What we really like to see is a test, right? So it moves on. These seem to be going up on a little bit no demand. This bar definitely appears to be no demand. And you've got a sign of weakness on there. No demand, right? Read those dialog boxes, please. Now, what have I said to you? I think the last 6, 7, or 8 seminars, if you see a red arrow in a rising market, and the very next bar is tested, that's a very, very positive sign. They want to go higher. And if you're a scalper, you want to definitely pay attention to them. And it moves on to the next bar, look, and lo and behold, there it is. Test, look. Read the dialog boxes. Put the cursor over the arrow and read the dialog box. We don't hold any secrets back from you. Everything we tell you is written in the program there. And that's why it went up, look. So up, up. Now, lo and behold, there's another down bar. This also looks like a test. But there's no signal there. But you should recognize that immediately. If you look down the bottom here, as you're probably all fully aware, bar is down, volume is low, spread is narrow, close the middle. if you're writing a book on what test looks like, that's how you describe it. A red down bar, narrow spread, closed, well, it's almost on the high, look. Low volume, after a sign of weakness. Sorry, here we're talking about, it's the same thing. There probably is weakness there somewhere, and they're testing the market. We move forward on that, and there's another test, look, here. And I think you'll find that one, look. The parameters are almost the same, look. Bar is down, volume is low, spread is narrow, close in the middle. That is a test. And I must have told you that hundreds of times. On that, the market turns around and bang, up it goes when it opens. That must have been the opening bar. Now we've got some weakness here, obviously. Here. Supply coming in. There's high volume. But that's not sufficient to go short at the moment. We need more evidence. So we can watch that unfold. Now, before I go any further on this chart, are there any questions about this particular chart? Please type it in. Pete's there, looking at the screen.
Yeah, hi folks. Yeah, just type something in if you want any questions answered about, or any comments even, about principles of VSA.
That chart.
And in particular, this chart in front of you. And maybe you haven't, maybe you have.
Looks like a reversal,
Where is it in the chart? Tom's saying it looks like a reversal, but it's not.
The main thing is heavy buying there.
In fact, now a reversal, if that was a reversal, it's in the wrong place anyway, isn't it, Tom?
It's not reversal, because the close is wrong.
Yeah, but if that was at the top of a move and the close down here was lower, that would be a reversal, but it just all looks wrong for a reversal. So it's not a reversal.
That's buying.
Right, so in comes a question from Tina. Hello, Tina. Yeah, there's a question here. And the question is, would going long after the black bar be advisable? So there's only one black bar there. This one here.
That's testing too.
That's testing too. The only thing is, Tom, would you go long on that based upon that? Bearing it. I'm only saying it because of the tail. Let Tom speak.
Well, the thing is, you've got that stopping volume in the background. So you know perfectly well that they moved in and bought. Now, we're talking about this black bar here. Sorry, I've lost it. It's running live. There you go. Yeah, it does look a bit dodgy going along on that, doesn't it? It looks almost like no demand, but ignore that, because the main thing is this, look, this is stopping volume. You can't expect them to send you a telegram, right? But the thing is, testing, look at that. Now, we don't have an arrow on this one, but this is a test as well, look. Right? Look. Very low volume. Closed near the high, on the high. Spread is narrow. That's a test. They have a little bit no demand here. As we saw. That's followed by another test, look. Up, up, another test. Up, up, another test. And then we get the opening, I think. That's probably the opening of the market. But we got some weakness appeared, and that's why it's just going sideways at the moment. There was some heavy volume. Markets don't like heavy volume on these up bars. Now, admittedly, when the American markets open up with the pits, right, the volume surges. So we've got to take that into consideration. So the volume is not so high as it looks, because the volume is relative. It's not relative to the previous volume in this. But the computer seems to handle it quite well. And I say to Gavin, ignore the signals at your peril. Because sometimes, after so long, you may get very cocky and think, oh, well, yeah, I don't need signals. I've heard that before. However, ignore the signals at your peril. Now, I was speaking to Gavin earlier, and he's very happy. He's made $900 shorting silver, I believe, and he wants us to look at the euro, which we will do in a minute.
So there's a question from Leslie asking, why is the time frame showing 111 just here? So I think some people came in a bit late from the start of the seminar. Tom was saying that it was purely arbitrary. That number came up. He's got no idea how it came in, but it's just illustrating that all the time frames are valid. Yeah, they're all readable. That's so purely arbitrary. It could have been 100, 120, which of course is 2 hours, anything. So that was by the by. Krista is asking, hi Tom, have you ever experimented with volume bars where every bar has the same volume, and from there analyzing the relative range and close from bar to bar to determine if supply or demand is present?
Sorry, what was all that?
Read it again. Tom, have you ever experimented with volume bars?
No, wait, he has, or you, or we?
Asking, have you ever
Yeah. Experimented with the volume bars.
Where every bar has the same volume, and from there analysing the relative range and close from bar to bar to determine if supply or demand.
Well, there is a lot of information in the price spread, because to make a spread narrow, right, they must have either bought it at the low and supported it. In other words, put the floorboards under it to stop it dropping, or the opposite, capped it by putting the ceiling. In other words, they sell. Every time the price goes to that level, they sell. And that can make the price narrow. There's a lot of information in the price spread. Now, we're looking at this, the future seems to be a lot more reliable with the volume. The cash market, they can definitely play around with that a lot, and they do. London's notorious for it, I'm afraid. But you could do all these experiments yourself. Just the more you look, the more you see.
Now, Muir is asking, Muir, would you consider the first large volume up bar after the 3 tests as absorption volume?
Well, it is only absorption volume if you've got an old top to the left somewhere. Now, on this chart, I don't have enough bars. See, I can't see. They could very well be.
Well, I mean, you can argue going back here, but not really. Not recent time. Go further back, you can see there was an area of congestion here. But
Normally, that may be some absorption. If there was a top obviously visible to us, then I'd say yes. That's absorptive volume, and you would expect that to be tested. But that to me looks like supply. But we'll let it unfold, and if anything positive, readable I should say, appears, we'll try to catch it. Right. Yes, Gavin wants us to look at the yen. Do you know the code for the yen? Peter's asking. Yen versus dollar. Well, we have it on the continuous contract, so no. Yeah. But Gavin likes to do this. He likes to ring in up into the blue. We call it lastminute.com. It doesn't give you much notice at all. It like throws you in the deep end of the pool with little or no notice. That's all right. Well, this certainly looks weak, doesn't it? Although, I'm saying that, well, you see, when you see these wide spreads down like this, that could be a sign of weakness. But it could also be stopping volume, couldn't it? But has it dropped enough? You see, the market has to fall sufficiently to become vulnerable to make professional money become interested in putting their $5,000 or $10,000 contracts in there. Has it fallen enough? It doesn't really look, although there was a bit of buying there. Did Gavin go short earlier? I think he did, yeah. I think Gavin went short on this. Yeah, I think Gavin went short on that upthrust. He's trading live, apparently. Right, okay, put a 30-minute chart up of the S&P 500. I mean, I like watching the S&P 500. That's it. Now this is only half hour, right? And we've still got the weakness, but there's even more weakness appeared. Supply. No demand. That's it. Well, that's typical. Professional money would see that what caused that parameter. Add that. They would see that, but they mark it up, and that's why you get no demand. And that's why it's drifted off, look. Well, if you examine these bars, you see they're what we call strong bars. But there's a test just before the start here. And of course, we've got something here. What's that say, Peter? That says shakeout. Yeah, markdown. To suddenly reverse. That's a test. So suddenly reverse is a mini shakeout there, which is positive. Means it wants to go long. And that's a down bar. Look, closed near the high. low volume, that means it wants to go up as well. So you've got all these bars here that are telling you, well before the start of this up move, that it wants to go up. Any questions, please? This is a 30-minute chart. Anything up, Peter? Oh, go on then. You want to look at what, gold? Yeah, Gavin likes the gold. Be quiet as I don't follow it much. Well, there's no stopping volume there, is there? So you certainly won't, all there is, we're missing, we've got this. So the computer's looking at this as a shakeout, which is fair enough. Down on narrow spread, with little or no volume, you expect this market to at least drift up to that trend line. But you have to read it as it unfolds. But right now, you wouldn't consider shorting it. It's too late. You have to short up on these signs of weakness. There's signs of weakness there. There'd be loads of weakness on different time frames. That's an upthrust look, confirming the weakness. Then it starts trending down. A widespread down, as it rushes towards a former area of support, here the trend line, is normally a sign of weakness, not strength. That has to be no demand. Is that no demand, Peter? It is, yeah. Then off it goes down. So to me, this looks like a weak market, although you may get some sort of rally now. You can't trust them, especially on a Friday. Oh, we don't have, it's right. Oh, there's bag holding somewhere. I think he said it was on the yen, was it, or the silver? What's that? Well, it could be bag holding, but see, Gavin's got the luxury of different time frames. And you'd obviously be checking at different time frames. But as soon as you see bag holding, that's one of our most powerful signs of strength. Has to be. We only spoke about silver and the yen. Is it on the yen? See, it could be on. Nope. What's that say? Oh, it is bag holding. Yes, see, let me have a look at that. Yes, is that volume? Well, I suppose it is. There's the average line. Of course, you are dealing with the market in America probably opening there. But that certainly looks like strength there, doesn't it? It certainly looks as if they're trying to buy that. You would expect that yen to at least drift up a little bit higher, but we need to see definite testing. That's not really, you see, bag holding is when some terrible news comes out after a fall, which we've seen, fair enough, and it's normally gapped down. The computer, I have noticed, it's not gapped down. So I take that one with a little bit of pinch of salt, perhaps. If that was gapped down, then it would definitely be bag holding. And the volume needs to be a bit higher than that. Volume needs to be higher than the previous volumes, which it isn't. So although it's a sign of strength, it doesn't hit 100% parameters of bag holding. Okay. But apparently shorted this on that up thrust.
Right, so Keijo's asking, can we see the hourly chart of gold? We don't unfortunately have that, Keijo, that data, so we can't do that, sorry. Leslie's asking, can we look at CL? Last week you said it looked weak. Is it still, or is it overcoming weakness? So let's have a look. Of course, CL is oil, crude oil. So that would have been, yeah.
Right. Well, it looks like no demand, doesn't it? Looks like no demand there. What's it say? No demand. Yeah. There's a red down bar. There's no selling pressure, look. That must have been Monday. Tuesday. Well, the thing is, when you make a statement, like you say, it looks weak, you're sticking your neck out, obviously. And then when it jumps up like that, what does it say though? It probably still is weak. Don't be surprised that doesn't come off.
Okay, so Louis or Lewis, I'm not sure, is saying, can we please look at the pound and the euro?
Pound versus the euro.
Yeah, 1 hour and a daily. So first of all, let's look at the daily then. Forex pound. Tom?
That's a pound daily. Is pound daily?
Yeah.
Well, we've got nice up thrust there, look. That's very positive information that's going to come off. Falls. For that to go up, we'd like to see narrow spreads down. Or here, no supply. In other words, the computer's noticed that it's gone low, down into fresh low ground. The volume is low. In other words, there's not a lot of selling pressure from professional people. And that's why I put that green signal up. And sure enough, up it goes one. It's gone up at least 4 or 5 bars on that. The last one's incomplete, of course. It doesn't ring any bells with me, to be quite honest. I mean, this rings a bell. Obviously, when you see that, that's a definite upthrust. You know that's going to come off. And it's followed by no demand. It's definitely going to come off. But these down bars in the fresh low ground on these narrow spreads, closing in the middle and volume low, means that professional money are not selling all their contracts. They must be hanging on to them. And that's why it's gone up at least 4 bars. Okay, but that's the pound daily. While we're here, let's look at the pound 1 hour. Have we got a pound 1 hour? There it is. So I'm just looking, well, there's quite a few shakeouts. Look at the bottom here on the lows. There's one there, look. And there's obviously one here. That's why it's going up. There's a red arrow. Next bar's got supply on it though, look. There is supply hitting the pound. Definitely. That doesn't look healthy at all. High volume and down bar, that's almost getting to look like a top reversal. If you see any no demand up bars now, or any up thrust somewhere along here, that'd be a more positive sign of weakness. That'll come off. Okay, this is the Euro daily. It's funny how they look the same at times, similar. There's the up thrust that we saw on the pound. Is an up thrust on? There, isn't it? No. Not a good up thrust, admittedly. Oh, you've got a better one up here. Hidden up thrust. Yeah. Well, it's not really hidden, is it? It's in full view. And then you get no demand after that. Professional money would see all this. Those yellow boxes will be telling us there's no demand in the market. Then it's a gotcha bar. These widespread down, close and low, are done deliberately to lock as many traders in or out of the market as possible and misfoot them, mislead them. So that's weakness there. And this looks like a bit of a no demand up move, look. There may be a little bit of support come in on that last bar. Is that bar complete? It's not a good idea analyzing these bars until the bar is completed. Because as you know, you can look at something, you say, oh, look like a test, but time is finished, not a test, something else. So you have to wait till that bar finishes. But that looks to me as if there's some supports come in, or a support lack of selling. Don't forget it's a Friday. And they do funny things on the Friday deliberately. Well, that certainly looks weak, doesn't it? Got these two up thrusts here, look. Supply. Up thrust. See, professional money would see that supply. Well, definitely, they caused it. Right, so they say, right, we'll have an up thrust. So they ram it up, catch as many stops as possible, mislead as many traders as possible, and then let it go. So that is weakness. They've had a go at trying to shake the market out on the low here. That looks like a test. So you have to be careful of these tests looking at a rising market. There's no signal on that. However, when you see that down bar, now let's just see the parameters look. It's not a good down bar because it's got top tail to it. There could be a bit of supply there. The computer's reading all that. What's it say? Volume very high, spread average. It's not closed middle. It's not meeting the ideal parameters of a test, is it? There is supply there, and that's why this has appeared here. There's supply in this market. But whatever it is, they'll do their best to mislead you. They're a devious lot.
Question here, Tom. Right, got a question here from Michael. So this is a long question, Tom, so switch your memory banks on. When you learnt market accumulation from Wyckoff's chart descriptions without your VSA signals, can you confirm that to find the market turn, you added the volumes of each wave, either relative, that is divided by the last 21, or actual volume, until the down volume equals or exceeds the up volume, in the case of a 2-bar bottom reversal, before the market has no supply?
Well, to be quite honest, they make things as simple as possible. You know, all this sort of theory about doing this and doing that may sound good, but you can actually read the bars. And whatever the market's doing now, it's doing it because of the background. Always keep that in mind, which is common sense. Whatever you're doing today is due to your background. Same thing in the market. So I think you'll find it easier if you get away from this belief that you can add this and subtract that and do this and do that and you get an answer. You won't. For the simple reason is it's human beings. They're a devious, cunning lot. And they're there for their own benefit, not yours. And they know what they call crowd psychology. It's like if you're a fire chief, you know, you could describe to your students coming in exactly what people do in a packed cinema, if there's a fire. They know crowd psychology. They know what would happen. And professional money know. That's why they have those wide spreads down or wide spreads up like that, which Gavin calls gotcha bars, which is actually a very good name. So, no, we didn't do that. It's reading the market. It's not really. It's an art, which it may sound a bit confusing at first, but if you keep plugging away with it, you'll see it. The price spreads, the volume, of course, or activity. What's happened in the background? Is the market vulnerable? Has it fallen enough to attract money into it? Has it risen enough to expect them to start selling, unloading? Okay?
On that subject of the background, you can see perhaps on this chart now, this 30-minute S&P, how the background plays such an important part in what's going on now. So there's weakness, which is the background. Tom talked about supply being there. And look how it's come off. Is that a fair comment, Tom?
Well, thank you, Peter, but hang on, Dallas has just come. Asked if we want, what, coffee or tea or something.
Why, do you want something?
Yeah, give me a coffee, darling. That's Dallas, my right-hand man.
Thank you. Nothing male about me.
Nothing male about her, she says now. No, the background is very, very important. I mean, analyzing these charts is surprisingly a rarity. You get your head around this, you won't find many other people in the world know what you're talking about. I mean, most people look at this and say, well, it's fallen because there was some bad news came out 10 minutes ago or something like that. It wasn't that at all. It's falling because of that weakness we saw at the top. That's selling. The computer picks it up. The computer does what it's told to do. It doesn't have any view. It doesn't say, well, it's lunchtime, or well, it might be a holiday, or well, even they closed early, anything like that. It doesn't want to know. It's just following what you've programmed into it. And that's what's extremely interesting with these computer programs, because when you program for stock market that's running live, you have to have fed in the right information. If you've got it wrong, you're going to see very weird arrows coming up all over the place. And luckily, we've got a new programmer who's a Russian, who's extremely clever and extremely good. And hopefully we can improve this even more than it is. Okay, any questions, Peter?
John's asking, can we look at intraday crude oil? Unfortunately, John, we don't have the data for that. Intraday crude oil. We've just got the end of day for that, unfortunately. Now, B. Roman is saying 6E at 10 o'clock, it said it was ultra high volume. I don't see that. Let's have a look. Let's go back to 6E. I think we're looking at the hour, won't we? Now, I'm not sure really.
What was the question?
The comment was that at 10 o'clock, that's it. So at 10 o'clock, it does say ultra high actually.
Yeah, but don't forget,
It's,
when the market opens.
yeah, here.
So it's going to distort this.
Yeah. So the point being, it's all relative. So compared to the average, if you look at that salmon area, that pinky area here, it relates to the average of the volume. Now, not to confuse things, we don't use average volume as such. However, it's worth bearing in mind that. So at this point, because the volume's been so low here, it treats this as ultra high. Is that right, Tom? The computer program, this one here. Use your magnifier, you'll see what I mean.
Ultra high, which is above the average one.
Yeah, so it's just tipped into that salmon area. So you may argue it's just a feature.
Fantastic down bar here. It's obviously buying there.
Yeah.
Sometimes they take off so much of the stock or whatever they're trading that it can go up on what appears to be no demand, but there's a test there.
Yeah. So really that's a red herring in a way, questioning that. It's all about relative. It's a Tom saying that bar that's we're on now, the red bar there, closing the middle, that's the important bit. So don't get too strict with yourself with figures and facts and all that sort of stuff. Does that make sense? Yeah, so B. Roman says it causes confusion, yeah. So I understand where the confusion can come from, but visually checking is actually much better than rather than looking at sort of hard and fast bits of information. This is just a guide down here as best it can. It's better to look at the relative volume. Okay. So let me read this from Keijo. in the gotcha bar in lower time frame sometimes can be stopping volume. Shall we ignore that? That's a good one. Tom? What was it? So in a gotcha bar, it'll widespread down and say, sometimes if you look at the lower time frame, you can see stopping volume.
Yes.
So should we ignore that?
You don't ignore anything on any chart. It's part of the your skill as a diagnostic reader of charts. What was the question, though?
The question was, if you see a gotcha bar,
see a gotcha bar, yes.
It widespread up.
Down, yeah.
If you go to a lower time frame, you can sometimes see what looks like stopping volume.
Well, yes. If you look at naturally, sometimes a gotcha bar might be over 30 minutes, according to the market conditions. And if you look at a 5-minute time frame, right, could be lots of bars there showing you the mark down and the supply coming in. But all these charts, all these time frames are telling you the same thing. They may be telling you in a slightly different accent, but not entirely a different language, believe me. And the more you look at them, the more you study them, the better you become, believe me. And once you've got this under your belt, you will never, ever regret it, I can assure you, ever. Because you have this skill with you for the rest of your life. Of course, we're talking about scalping here all the time because we find it a little bit more exciting. You know, you short here or buy there, make a few $100s and then buzz off, sort of thing. Fair enough. But if you're a fund manager like Philip Friston, apparently he'll start doing the newsletter, which would be fantastic, because he'll show you how to even analyze the charts fundamentally, plus the signals. And because if you're a fund manager, you're only interested in long-term views. Or if you were guarding your pension or whatever you wanted, you would be more interested in long-term views. Of course, you can always follow our weekly or monthly charts, which will give you a good insight into that. But even on these monthly charts, you'll see testing. And as soon as you see a successful test, don't forget it'll be a red bar down. Right, you can make your own colors, I believe, but I've got mine red to show you it's gone down. If it's down on a narrow spread, if it's probably, well, the main criteria is a narrow spread, volume low or lower than the previous two bars, right, probably close in the middle. Sometimes tests close on the low, right, but they're still a test. It's the narrow spread that's most important. Right? Please, any more questions?
Yeah, so Keijo made a comment here. Yes, I study very hard, but every time I do it wrong.
Well, that's an interesting statement anyway, isn't it? You study hard, and yet every time you get it wrong. You get it wrong because you're believing what you hear. Right? You've got to be devious. You've got to think. You've almost got to feel you're talking to a dodgy second-hand car dealer trying to sell you a car out on the lot. Right? You're not so careless with him, are you? You know, you check it. You wonder if the mileage is right. You look at the tire. You look at the pedals, see if their rubbers are worn, and all this type of thing. You don't take what he tells you, or you shouldn't do, and as you get older and more experienced, you certainly wouldn't. He's there to sell the car. He's not really interested in telling you the truth and nothing but the truth. Now Rita's just arrived. Hello, Rita.
Hello.
Right, so that make sense?
Keijo says he never listens to the news.
Ah, now, that's interesting. I never listen to the news. Yeah, but they lie to you with the price action, don't they? See, you've got to try to visualize how the herd behaves when the market does certain moves. I mean, I was sitting here, I think it was yesterday or the day before, and there was a hell of a shakeout. It looked quite alarming because it plummeted down. There was another attempt to shake the market out. But they get you on the price action. The professionals do use the news to add to the impact of what they're doing. But if you don't listen to the news, you're still watching the chart. I mean, say this chart now we're looking at now. What time frame is that? 30 minutes. Now you look at that chart now. We've got weakness at the top. It's rolled over. Now, is that a 50% drop in the retracement? What's the volume? That could easily hold. We don't have a decent trend line. I find it difficult to follow charts without decent trend lines, to be quite honest. But we can't draw a trend line in that last bar because we don't know if it's found support or not. But they're crafty. They mislead you by the action. I mean, as an experiment, you could experiment. Why don't you think about doing the exact opposite to what you feel is right? Let's see what happens as an experiment. If you're fairly convinced it's going to go up, right? On paper, of course, you try going short, and you might be pleasantly surprised, and you may learn a lot. But Rita now has just walked in, right? She's only been doing it for, well, how long now, Peter? How long? A couple of years or so. Now, she makes money on a regular basis from just following up thrusts. But she also works with solicitors doing all their typing as well. So she has a computer in the kitchen, and as she's preparing meals or whatever she's doing, she's got one eye on the Dow Jones, and the Dow likes to have up thrusts. And if you've got weakness in the background, bang, short it. Don't hesitate, you just have to go.
Yeah, while Tom was talking there, I was thinking about when I first started, I had trouble of perhaps a similar nature, I don't know. And what I, in the end, discovered about myself was that I was not waiting for a definite principle. I was using my own instinct. Despite everything I'd learned, I still used my own instinct. And Tom says you can't rely on your instincts, which is true. It's meant that it's kind of there to deceive you, I suppose. And when I started just waiting for the right principle, I found my success came. So that was me. It may not be you, but it's just a thought. So Lewis is saying he likes Gary Fullett's webpage that explains in detail Wyckoff methods that help to understand VSA. So I know sometimes Tom has been asked that question. Should I, put in the question, should I study Wyckoff to get to grips with this? What do you say to that, Tom?
Well, the only Wyckoff course I know about is the one from SMI. They're in Phoenix, Arizona at the moment. But it was fairly pricey, and you get 3 black books and some instructions, I suppose, but all the charts, or they may have changed now, were pre-war. And I personally, well, I know that you can't bet on what you've got here. And although it may be difficult for you at first, well, visualize this, look. Do you play bridge? Perhaps you don't. Say you're going to suddenly play bridge. You go into those halls with 100 tables with experts all playing, right? You're going to be very, very unhappy and very, very confused until you learn the game. It's as simple as that. You can't expect these things to suddenly become easy. If they were easy, everybody would be doing it. Now this is a 10-minute chart, look. You could draw a trend line through the 2 highs, look, Peter, and the first low. That was traditional Wyckoff way he drew trend lines. First 2 highs. Make sure it's an up bar, and then the first low, make sure it's a down bar. There. Now you can see how these trend lines work. Now why they work, God only knows. I've no idea. Well, I do know it must be human behavior. And I'm sure that there's some clever guy out there or woman can figure that lot out. But trend lines work. And traditionally you draw them, let's like Peter has now. First 2 highs, first low. And then you would expect support on the lower trend line, exactly which we've got, look. There we are. So we've got some stopping volume. I think the computer's looking at the previous bar, and on that stopping volume we see there, look, it's gone up. So don't be surprised if this doesn't drift up to that top trend line. You certainly wouldn't want to go short, here. You might consider going long for a small up move. But this looks like weakness. When you see this car moving over like this, we call this a mushroom shape. And if you look at these bars, look. Now I'm looking at them. That's an up bar, look. No demand, look. Now I would know that before I even looked at it. Even that's no demand, look. It's lower than the previous bar. There'd be no selling pressure on these red down bars. And there again, look. A blue up bar, look. This time it's closed off the high. And the volume's low, look. It's less than the previous 2 bars. And even that one, look. So the volume's coming in on the down bars, right? And decreasing on no demand on these blue up bars. That's telling you, look, I'm going to come off. That's what we call strong or weak bars. That's very, very interesting. If you follow those bars. I should really do a seminar on nothing else but strong or weak bars. Now, this stopping volume on that previous bar, look. Right. On that stopping volume, look how it's hit the trend line. Up it goes, and that's what produces signal.
2 questions before we finish, Tom. Right. Yeah, so final 2 questions. Is Gavin doing the final bell today, or as everyone else says apart from me, I say the final bell too, the closing bell. Thomas asks, well, I'm asking Tom now, is Gavin in Russia? No, he's back in England. Yeah, so I've looked on the schedule for GoToWebinar, and I can't see any entry there for Gavin's closing bell today. That doesn't mean it's not taking place. So the short answer is I don't know, but that's all I can tell you. I don't know, and I can't see it. So if there's a link to click it and see what happens on the VSA Club. And the other question was, I'm a bit confused, says Leslie. Does ES look strong, shaking out the market, or?
Well, the ES looks like some strength has come in.
All right, so Tom's saying it was weak because of supply earlier. We said that, and Tom said that, and now strength coming in at the bottom. So, as you know, the market can be strong, can be weak, and it moves around. So at any given time, you have to just check what's going on in the story. Tom says it's an ongoing story, which is a fair comment. Okay, so that's it, folks, for this week. Thanks very much for coming along. We'll, as usual, I think, be doing our newsletter on Sunday. And what else can we say? That's it, I think. Michael Healy is saying the link for the closing bell on the 28th is on last week's email, at least. So if you can find that, do try it out. So as Gavin is back in the UK, as far as I know, is likely to possibly do it. I don't know. Okay, so with that, we'll say, yeah, let's do that. We'll ring up Gavin now and ask him. If you don't mind just hanging on, folks, 2 minutes, we'll give Gavin a ring and ask him if he's doing that tonight so everyone knows. I won't sing while we're waiting. Yeah, so the newsletter will be on Sunday. I'll be uploading this webinar onto the VSA Club in the next couple of hours.
Tonight, it's going to be on Monday.
So Gavin said it's not tonight, it's going to be on Monday.
And there'll be live trading.
And there'll be live trading.
Okay. Thank you, Gavin.
So that's the answer from the horse's mouth. It'll be the opening bell, he said.
Or the opening bell, not the final bell.
Great, okay. So there's an email coming out. Was the last bit of the message. And Tom says if you're lucky, but I'm sure it will. Okay, right. Enough chat. We'll be off now. So thanks all of you for coming along. We look forward to seeing you next time. So with that, we'll say good night or good afternoon.